Welcome, Accounting Boffins. You with Ashraf Patel and the team. And we're continuing with periodic inventory and inventory systems. And we're also looking at ideas as to how we can solve problems or challenges that businesses may experience. Expect this type of questions in the exams as well. Okay, so here goes. If we look at this question, before we go into the question, let's look at the summary once again. What do we know about inventory systems? One, when you're dealing with perpetual inventory, the most important thing to remember is you're keeping a continuous record of stock. In other words, you have a cost of sales account. Keep that in mind as an important feature of the perpetual inventory system. Right, when you're looking at periodic inventory, what do we know? We know that we do not keep a cost of sales, right? And also, what is important for you to realize is that each of these systems has the advantages and the disadvantages, which we've discussed in previous lessons. So go through them again, make sure you are familiar with them and you understand them. Very, very important. Okay, so now if we look at our question, it says here, required, identify a problem in each branch, quote figures, and offer solutions, right? So this is a data response type of question where you are given the data, you are expected to analyze and find the problems and then obviously offer solutions and make necessary suggestions. So here we go. This is the information that we have regarding our three branches, one at Queens, one at Kofivamba, and one at Solo. Okay, so now the question says here, let's look at the first at Queens branch. We have to identify, looking at this branch here, looking at the information that we have, and see what do we find as a problem. Okay, so if that is the Queens branch, let's go into the answer. The first problem that you identify is missing stock. Now let's look at that. If your stock balance is 230 and if you sold 180, right? Let's do that. If your stock balance is 230 and you sold 180 units, meaning you're supposed to have 50 units on hand. Clearly you can see that that is not the case because your stock balance is only 35. Therefore, it tells you that there are units that are missing. So clearly you can see that when you're analyzing a question of this nature, look at the information that is provided to you. So we looked at it, and in terms of the stock, we found that in this particular branch, there were 15 units of stock missing. Right. Once we've identified the problem, we now have to offer a solution to the problem. What is the solution? Number one, we need more effective stock control. In other words, the business needs to ensure that there is stock control. Number two, check against stock records. In other words, check if these are the number of units that I've bought, these are the units that I've sold, clearly the two should match. And therefore, if they are not matching, definitely we have a challenge in that business. Set up security, very important. Now, when we're looking at security, make sure that the security that you are setting up is effective. In other words, take your items, maybe put a code on it or a sticker which beeps if it moves out without it going through the till system, or there's many other security measures that you could put into place. So what we have to do is we have to set up some kind of security. Okay, the next branch that we're looking at is your Kofivamba branch, and here we have to once again look at the information and see what can we identify as a challenge. Now, just to give you an idea, if you look at the stock, you had 160, you sold 40, you got 120. Clearly you can see that is not a challenge in that store. So where is my challenge? My challenge is, if I look at this store here, clearly I can see that relative to my other stores, look at this here. you can clearly see here that, let's just go back here, and, oh, we're still busy with the Queens branch. We'll come back to the other branch. Let's carry on with Queens. If we look at Queens, another problem that we have identified here is your advertising. Again, look at your advertising relative to the other branches. Okay, so we only spent 1,400 on advertising, whereas the other branches are spending 6,720 and 6,120. So clearly you can see that we have low advertising, which is only 0.7% of your sales. So if you have low advertising, how do you remedy the situation? Very simple. We will remedy the situation by budgeting more for advertising and to assess if it increases your sales. In other words, increase your budget for advertising, and when you increase your budget for advertising, you must also assess that if I've increased the advertising, is it having an impact on my sales? Because clearly you have to advertise, right? As we often say, you can't wink at somebody in the dark because surely they can't see you. So therefore, if the lights are on, they will be able to see you. We have to advertise our wares. Okay. The next branch we're looking at now, obviously, is the Kofivamba branch, and this is where our emphasis is now. And if we look at this one here, let's look at the first challenge that we have here. If you look at your sales, right? 44,800. Once again, compare it to other branches. Looking at Queens, it's 201,600, and if you're looking at Solo, it's 81,760. So clearly, we can clearly see we have identified as our problem our low sales volume. In other words, how many units did we sell? Look at the information. Number of units sold. Clearly, you can see it stands out. If relative to Queens and Solo, it stands out. So clearly you can see you've only sold 40 units of the total 160 units in stock. So your low sales volume. Right, then what's the solution to the problem? How do we solve the problem? Very simple. We pay the salesperson a commission to improve sales. In other words, you don't give a fixed salary because to motivate the person, you have to base their salary or link it to your sales. So if the sales increases, the person would obviously earn more, and that would be an encouraging factor to improve our sales. Right? Remember, we're still busy with the Kofivamba branch. We're holding too much of stock. Let's look at it. Here's my stock balance. Clearly, you can see you have 120 units on hand. Now, obviously, that is directly related to your sales. The fact that you're not selling enough means you have too much of stock on hand, and surely that in itself poses other challenges. The moment you have too much of stock, it can become obsolete. You're also then opening yourself up to possible pilferage and theft if you're holding too much of stock. Right? How would we solve the problem? What we would do, we can transfer this stock to the Solo branch. That means move it to another branch where obviously there's a need for the products. Okay, the next one that we're looking at now is your Solo branch. We've identified Kofivamba. We said high advertising cost, and this is still the Kofivamba branch. Let's go back and see what we identified here. We have advertising of 6,720. Remember, that's the branch that we're looking at, okay? And we can see that although there is high advertising, 6,720, it's not yielding the results. Clearly, you can see that. So it means that there's something wrong with your advertising campaign as far as this branch is concerned. And obviously the salary. We mentioned earlier that in this particular one, the salary of the person obviously is higher than the queen's, but yet we're not getting the desired results in terms of our sales. So this means, therefore, monitor your advertising to ensure that there is no abuse, right? It's possible that the advertising campaign is probably given to somebody who's au fait with the salesperson, and there may be abuse of the advertising budget. It needs to be investigated. Also, extend your market. Look at where your market, you can extend your market to. In other words, look at the current situation where you are situated and then ask yourself, is it possible for me to extend into another market in order to increase my sales? Remember, what do we want to do? We want to increase our sales. Monitor and manage the salesperson. Obviously, set better sales targets. This means, therefore, that you have to now monitor your salesperson, because clearly, because of the high salary, you're noticing that there is not enough units being sold. So clearly, you need to put strategies in place where you monitor the salesperson, and also you then set targets for the sales team. Okay, I think we're moving on to the next branch now, and that's the solo branch. And okay, clearly you can see you had stock of 85 and you sold 85. You've got no stock on hand at the end of the year. Meaning, clearly you can see, as far as the solo branch is concerned, one of the problems that we've identified is that there's no stock to meet demand. Clearly evident from our information. What can we see here? We can see that we have 85 units on hand, right? And we sold 85 units. So this therefore means that clearly, if you had more stock, it would have been possible to increase your sales. Therefore, this is a serious problem for this branch here. Clearly you can see your stock is running out. You have a nil balance at the end of the month. Here, once again, you can see that 85 minus 85 is 0. Is there another challenge in that branch? Let's go and check it out. If you look at your deposit here, you have a deposit of 81,760, right? And if we look at the figures, let's take out our calculators here and say, okay, if we take this into account here, we had sold 85 units, so that's 85 times 1,120 will give you a figure of 95,200. Okay, what's that again? I said we sold 85 units, as we can see here, and the selling price per radio was 1,120, meaning if I multiply the units by the number that I sold, I should deposit an amount of 95,200. Okay, now let's look at what I deposited. I only deposited 81,760. Clearly you can see that the deposit is short of 13,440. So again, you got to study the information and look at number of units that I sold, what I sold it for, and the amount that I should deposit. Clearly you can see here that the deposit of my sales revenue is short. Like we said, if we looked at our calculator, the figure was 95,200, and if you take your 95,200 minus the 81,760, you're going to see you're short of 13,440. Again, watch this here. There's my shortage, 13,440. As a result, clearly you can see there's a challenge as far as the cash is concerned. Okay, now, where there's a problem, we need to solve the problem. Number one, transfer more stock to this branch here. Clearly, this was as a result of us not having enough stock on hand to meet the demands of that particular branch. Definitely, we need to transfer more stock into that branch. Okay. As far as the other challenge is concerned, right? Clearly, the manager is not doing what he or she is supposed to do, right? Because this means there's money being stolen, right, from this branch. And that is definitely unacceptable in terms of the operations of that branch. The manager is responsible for that branch, and the manager needs to account for the money that is being stolen. Also, monitor deposits, request notification from bank. In other words, remember, accounting is about control. So definitely, in terms of internal control, and we do know what we mean by internal control, the purpose of internal control is to safeguard the assets of a business. And clearly, our asset here, bank, is not being safeguarded. Clearly, you can see the challenge is the amount of monies that we are receiving is not the amount of monies that are being deposited into our bank account. Okay, guys, so we also said, remember, monitor our deposits, request notification from the bank as soon as a deposit takes place. And then obviously review the division of duties. In other words, remember what we said. Part of internal control is to ensure that we have division of duties. What do we mean by that? By that we mean one person serves as a check on another. In that way, you can clearly identify where our challenges are. Okay, guys, that's it for this segment. We'll take a quick break and we'll see you in a jiffy. Welcome back, accounting boffins. Right, remember, we're busy with inventory systems. A quick recap on something that we have to remember. Remember, when dealing with perpetual inventory system, what do we know? An advantage of it is you can determine your stock at any time. How do you do that? By checking your stock records, because you are keeping a record of the inflow as well as outflow of stock. Right, what's the advantage of the periodic inventory system? You do not need fancy equipment and extensive computer programming to be able to keep a record or run this periodic inventory system. It's a cheaper alternate if you compare it to the perpetual inventory system, right? Like I alluded to early on, go through these advantages, disadvantages, characteristics of each, and make sure you know them. Okay. Now we have information with, or we are given information with regards to Kaiser's sports shop. The business uses the periodic inventory system, right? So you have a clear indication of what the business is using. You are expected now to calculate the trading account or the trading statement, because very often you need to know both of them, right? But the trading statement is one that is asked more often in the exams than the trading account. So, but make sure you know both of them. What we're going to be doing is we're going to use this information to draw up the trading statement. Okay, now, what is it that goes into your trading statement? Remember, I'm going to use the two interchange. That means I'm going to talk about the trading account as well as the trading statement. You should know that both of these, one is in an account format, namely a T account, a ledger account, and the other is in the narrative form where you are given a statement to complete. Or the question could also just say, calculate. Then you have a choice of whether you want to use the trading account or the trading statement. Okay, so this is our information that we have. We have to work out the trading statement. Let's see how we're going to do that. We also have additional information with regards to closing stock, carriage and purchases, carriage and sales. Carriage and sales, we're going to come back to this one here just now, but I'm going to highlight it in red for you because if you remember from previous lessons, this one here is out to trap you. But more about that just now. So, if we look at my trading statement now, obviously it is sales less my cost of sales. Okay, now sales, in order to determine my sales, what do? I go and take my sales figure from my trial balance, from my extract of my trial balance, and I find that my sales figure is 864, but I know that whenever I'm working with sales, this will not be told to you. Please make sure you understand this part. They will never ever tell you as an adjustment whether you are doing financial statements or any other work where it involves bringing in sales. Always remember, it's always sales less debtors allowances. Always subtract your debtors allowances from your sales figure. As you can see here, what are we doing? We're saying sales, there's my sales, 864,000 minus the 4,000, which is my debtors allowances. Okay, guys? Please remember. Now, this is not only applicable to this type of question, but also if you are doing a question on financial statements, the first thing that you do is you subtract your debtors allowances from your sales figure. Okay. That's done and dusted. 864 minus 4,000 will give me my net sales figure of 860,000. Now remember, this cost of sales figure you don't have, right? Obviously, for our purposes, it's there, but remember, it has to be calculated. And therefore, we're going to use all this information here to calculate our cost of sales. Now, if we look at the calculation of cost of sales, for one moment, don't look at the figures. Let's look at the format first. What is it that we need to know? It's always my opening stock plus my purchases plus my carriage and purchases plus my customs duties. In other words, all those expenses that impact on the cost of my product. Remember, those expenses that will increase the cost of my product, because obviously where I purchased it, I need to transport or transfer that merchandise to the point of sale. And those expenses will obviously increase my cost. Then that will give you your merchandise for sale, less your closing stock will give you cost of sales. So that is the format. You need to know that format. Clearly, it is something that you need to know. Once again, I repeat, opening stock plus purchases plus expenses on purchases, that will give me my merchandise available for resale, less my closing stock will then give me my cost of sales. Okay, now the question that we are doing. Let's identify the purchases figure. Here we go. Purchases, 450,000. So immediately I bring it in, 450,000. But before that was my opening stock. Opening stock of 50,000 Rand. Therefore, there's my opening stock, 50,000 Rand plus my purchases. Okay, now there was an adjustment. If you recall, let's find the adjustment where we were told that carriage and purchases outstanding 2,500. So therefore, when you're doing your calculation, immediately you tell yourself, right, there's my carriage and purchases, the figure that's entered already, the 30,000. Therefore, there's my 30,000 as my starting figure. So I'm showing the calculation in a bracket. Start off with the trial balance figure, which is my 30,000, and add the amount that is still outstanding that I haven't accounted for, 2,500. Therefore, this will give me the figure that I need, 32,500. Let me take you back to the adjustment that I highlighted for you in red. And I said, carriage and sales outstanding, 500 Rand. Now remember, carriage on sales is not a purchasing expense. What is carriage on sales? Let's clarify it. Carriage on sales is the expense that we incur to transport goods to our customers. It is a normal selling expense. So therefore, it has absolutely nothing to do with my calculation of cost of sales. So remember, accounting boffins out there, when you see carriage on sales, immediately you should know that this does not impact on my calculation of cost of sales or anywhere in my calculations with regards to gross profit. Yes, if you were asked, how would you deal with carriage on sales? Then clearly it is an operating expense which will appear with your other expenses. So in other words, if we say, what's another name for carriage on sales? It is delivery expenses. The cost that you incur to deliver goods to your customers. Okay, so keep that in mind. So coming back to my cost of sales, I've got my opening stock accounted for, my purchases, my carriage on purchases. I looked at the adjustment. I now bring in my customs duties on purchases. There we go, customs duties of 6,000 Rand. And if I look at it, remember what we said? Do not even go near carriage on sales, right? For the purposes of calculating my cost of sales. Okay, then I go to, obviously, I now add those figures. And what am I adding? I'm adding my 50,000. Okay, plus the 450,000, which was my purchases, plus the 32,500, which was my carriage on purchases, plus the 6,000 customs duties, and this should give me a figure of 538,500. There we go. There's my 538,500. What I do now, I subtract my closing stock. Was my closing stock given to me? Yes, it was. My closing stock was given to me as an adjustment. Let's find it. My closing stock was 90,000 Rand. Therefore, bring in your 90,000 Rand as your closing stock. I think there's an error here. Let's just fix it up while we are with it. Your closing stock amounted to 38,500. So this is an error here. It should be 38,500. Let's change that. So immediately we know that we're doing the right thing. Let's look at it here. There we go. Closing stock, 38,500 to give me my cost of sales of 500,000. 538,500 minus the 38,500 will give me cost of sales of 500,000. Clearly you can see now, what are we doing? Let's go back to my cost of sales. Can you see this figure is calculated to be 500,000 Rand. 860 minus the 500,000 Rand will give me a balance or a gross profit figure of 360,000 Rand. So it's sales less cost of sales. Okay. Let's go into the next question. The next question, again, it says here, Top Stores uses the periodic inventory system, and you are asked to calculate the cost of sales and the gross profit. Can you see what I alluded to early on? No mention is made of whether you must use a trading account or the trading statement or whatever else. It just says calculate, and therefore, when that happens, the choice is yours. Here's my information. I have to calculate my, firstly, I have to work out if they're telling you that the firm uses a cost price plus 50. I've done this specifically for this question here to make you aware that your cost price is 100, your markup is 50, your selling is therefore 150. So what do we remember from this here? Cost is 100, markup is your variable. It changes from business to business. add the two, cost plus markup will give me my selling price. Okay, so now I say, I'm told physical stock take showed me, that was my balance of stock. There was the owner took goods with a selling price of 3,000 Rand for his personal use. No entry was made. So now we're looking at all of these adjustments, and we start off by saying, calculate the cost of sales. Start off with what? Your opening stock, 105,950. There's my opening stock. Trading stock, 105,950. Opening stock. Number 2, purchases. Right. Remember, with purchases now, you have to do an adjustment. Why? Because there were certain adjustments on your purchases. Number 1, you start off with a given figure of 342,120. That's that figure there. Then you look at your adjustments. What were my adjustments? Remember, they told you that there was a donation of some sort. Let's look at the adjustments to identify. Firstly, the following invoice received from Palm Distributors has not been entered. We bought goods to the value of 2,889. Clearly, it means that we have to now bring in the 2,889 into my purchases figure. There we go. Can you see? You're doing your calculations in your purchases calculation to determine the net purchases. Right. What else do we know? We also know that there was, let's look at the other adjustment. There was goods with a selling price of 3,000 Rand were taken by the owner for personal use. Now, because that was the selling price, you have to change it to your cost price. And therefore, that will mean that once you determine your cost price, you will see the cost price changes it, and therefore, you have to now enter the cost price of those goods, which is 2,000 Rand. Not the selling price, the cost price. The owner takes goods at cost. Okay. And then there was another adjustment for stock. Let's find that one. We've entered the 2,889. We've done that one. So therefore, we've identified all our adjustments with regards to stock. So once we've done all our adjustments with regards to the purchases, we now move on to the carriage on purchases, the customs duty, the merchandise available for resale. Remember, we're adding all the way down, right up to the customs duties. That will give me my merchandise available for resale. I now subtract my closing stock figure of 228,304 to give me my cost of sales of 105,950. Once I have that figure, clearly you can see you're going to take your sales minus your cost of sales to give you your gross profit. Okay, so what you understand from this question here is that whenever you are calculating, it is important for you, one, to show your calculations, right? And obviously, once you have done all of that, remember, the most important thing is to show your calculations in brackets. Because if perchance, if you get any one wrong, you will get part marks for your calculations that you have shown in brackets. Okay, so what we've done now is we've shown you how to go about calculating your cost of sales. And that is imperative, because once you have your cost of sales, you can now determine your gross profit, which is sales less cost of sales. Okay? That's it for the segment, guys. Let's take a quick break, refresh, and see you just now. Welcome back, accounting boffins. We're busy with periodic inventory systems. A quick tip, once again, remember when we're using the perpetual inventory system, we always say make use of the trading stock account. Okay? And if we're using the periodic inventory system, we make use of the purchases account. Clearly you can see a difference between the two stock systems. Right. Moving on to our question, it says here, again a problem-solving question, it says here, identify one problem in each tuck shop and provide one solution in each case. For each problem, relevant figures must be quoted. Now, this is important. One is to identify the challenge, right? Number two is to offer the solution. And number three, use figures to support your answer. It's very important as far as your mark allocation is concerned. Okay. They're telling you that Baker is the owner of 2 school tuck shops, Patty is the manager of shop A, and Benny is the manager of shop B. Each manager is paid 1,000 Rand per week. Each tuck shop sells only chips and juices. The chips cost 5 Rand per packet, important information, and are sold at a profit markup of 50% on cost. The juice is marked up by 25% on cost and is sold at 10 Rand each. So that's information regarding the question. Okay, there's our information. This is shop A and this is shop B, right? So there's our opening stock in units. There's our stock supplied by Baker. There's your closing stock. There's your units unsold. And there's your cash deposited in rands. Okay. So, shop A. What are we identifying as a challenge? It says here, high stock. Let's go back to the question and see what are they referring to. Your opening stock is 300, right? And your closing stock here is 200. That means the units sold were only 420. Okay? Now, if we look at this here, we can see that if you compare 300 and 200, you can see that they received 400 units, although they had stock on hand. Here, watch this here. Their opening stock was 300, right? Yet they received how much? 400 units, clearly indicating to you that they had a lot of stock on hand and yet they received more stock. Clearly, that is a challenge. And the other thing we can do is, let's check our units. If we take our stock and we say, fine, we had 300 plus 400 is 700 minus the 420, clearly you can see that there is a problem with the units that are missing. Once again, 300 plus 400 is 700, right? And if we sold 420, let's do that. If you take your 300 plus your 400, which is 700, 700 is the units you had available, minus the 420 that you sold, you're supposed to have 280 units on hand. Clearly you can see that you do not have units on hand, is only 200. Right, so clearly you can see what's the situation we have here. Units are missing. Right, so there you can see your closing stock should be 280 units. It's only if only 420 units were sold. That means clearly there was a shortage of stock. In other words, there is stock missing in that tuck shop. Okay, what's our solution? With regards to the high stock, monitor sales and stocks accordingly. That means, obviously, look at the number of units that are being sold. That will then determine how much stock must be supplied to that tuck shop. You can't just supply nilly-willy, not taking into consideration how much units are being sold. So stock control should be done daily. Obviously, what is happening here is the manager needs to inform you that, listen here, this is the stock on hand. Obviously, do not send excess stock because surely it is not needed. With regards to the missing stock, what we know that, again, control where stock is displayed. Obviously, you need to make sure that the way you're displaying your stock is not accessible to people that may have bad intentions in order to steal the stock, right? And also make sure, because there's a tuck shop, that it shouldn't be within the reach of your customers, namely the learners or the children, right? So make sure that you put these measures. Again, understand, what are we doing? We're putting control measures in place in order to safeguard the asset. Which asset? In this case here, stock. Bringing us back to what is internal control. The purpose of internal control is to safeguard the assets of a business. Okay. Again, there's our information. We're looking at shop B. What problem can we identify? Let's look at it and see. This is shop B, right? And if you look at your number of units that are being sold and relative to the amount of money that is being deposited, okay? Clearly you will see that your juice for cash deposited is short by 500 Rand. In other words, if you're looking at your units sold, you sold 370 units of the juice, right? And what did we say? We said something about the selling price of the juice. Let's identify it. The juice is sold at 10 Rand each, clearly indicating to you now that if you sold 370 units of the juice, 370 times the 10 Rand will tell you you're supposed to deposit 3,700. However, you're only depositing 3,200, indicating to you that the cash for the juice is short of 500 Rand, right? This means, therefore, that your cash deposited is short by the 500. How did we get that? 3,700 minus the 3,200, which was the actual amount deposited. There we go. This will tell you that you are short of the 500 Rand. Okay. With regards to the high stock, in terms of the chips, let's look at the information again. Here we go. Here we can see that you got a closing unit of 330 units of the chips, meaning that you have too much of chips left on hand. And as you know, these are perishable items. They have expiry dates. So obviously, if the date expires, we won't be able to sell the stock. You will then be sitting with obsolete stock. In other words, you'll have to get rid of that stock, which obviously means a loss for that business. So, with regards to the chips, too much unsold stock compared to the opening balance. You had 150 in your opening balance and 330 as your closing balance. Let's look at it here. Clearly we can see. Watch. You had 150 in your opening balance, and if you compare that to your closing balance, clearly 330. You'd expect it to be more or less the same as your opening balance. Why? Because if you started with 150 units of the chips, surely you should end with more or less the same amount, but this is almost double that amount of stock that you are left over with. Okay, so now how are we going to solve the problem? Remember, firstly, whereas we'll talk about the money that is missing, do daily reconciliations with managers. In other words, at the end of the day, do a till control to say, right, you sold 370 juices, you're selling them at 10 Rand each. The cash that you're supposed to have for the juices should amount to 3,700. But you know that there was only 3,200 for the juices. Clearly you can see the cash that was short. So do this on a daily basis so you can identify any cash that is not being deposited, most probably stolen. Okay? Therefore, this daily reconciliation is very important. The next item or the next challenge that we had was the high stock. Remember, monitor your sales in order to order appropriately. Obviously, you look at the sales of the branch, right? You look at the sales of the branch. Here you go. You're only selling 220 units. If you are selling 220 units, does it make sense to order 400? Certainly not. You're only selling 220. You had 150 at the beginning of the period, meaning that monitor and order appropriately. Because if you're ordering too much, like we said, we're dealing with a perishable item, it can become obsolete. There can be expiry dates on this year, and obviously, once the expiry date appears on that packet of chips, we will not be able to sell it, and it will be a waste, and it will be a loss to the business. So make sure that you order appropriately. Okay. Whenever you are looking at a data response question, what is it that you have to do? Number one, read the problem-solving question carefully and provide reasons based on calculations where required. Right? It is important to read the information. Look at the data that is provided to you. Identify. Look at what we've done. Look at units that you had, units that you sold, find missing units. Look at cash that is being deposited, number of units sold. Do your comparisons to identify where are your challenges. Okay, number two, consider ethical practice in your answers, right? That means a possible question could be, if you are asked now to say that a few packets of chips had an expiry date on them, and the tuck shop owner decided to sell those to the learners. Is it ethical to do that? Certainly not. Why? Because once an expiry date appears, it is not fit for consumption and therefore cannot be sold to learners. And therefore, what this means actually is that the business needs to be ethical in its practices. Right. We then looked at measures of internal control. Once again, you will find that I'm repeating this. What is internal control, or what is the purpose of internal control? The purpose of internal control is to safeguard the assets of any business. And in this case here, look at internal control measures that need to be put into place to ensure that we do not have any shortages of cash, shortages of stock, or any other challenges that the business may experience. Okay, guys, you've seen exactly how to go about answering questions of this nature. Make sure that you practice and you are au fait with it. Until the next time, keep your feet on the ground, keep on doing your accounting, and ace your accounting exams. From Ashraf and the team, until next time, goodbye.